welcome to the Mortgage Rate Weekly Market Update for the week of October 30th, 2017. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, mortgage rates have been moving slightly higher since September 8th, but last week we're hoping they actually found a floor of support. If you look at the bond chart on the screen, you can see the high for the bond was back on September 8th. That was the lowest rates we've seen in a very long time. But since then, you can see the bond has been selling off, breaking through a couple floors of support until last week. A great floor of support did hold, and then some very encouraging news there on Friday. That green candle shows that the bonds rallied off that support, and we're looking for the bonds to continue that momentum into this week. So we're going to recommend floating your mortgage rate to start the week to see if we can build on that rally from Friday and hopefully move mortgage interest rates lower as we move forward in the week. Now, if we dig into the economic news, a big report last week was gross domestic product. The first reading of the third quarter came in at 3%. That comes after a very strong second quarter final reading of 3.1%. So the GDP started off not so good in the first quarter, really picked up the second quarter to 3.1%, and here the first reading of the third quarter we're at 3% again. So that's great news. The big uptick in consumer spending was what's been helping the U.S. economy, because consumer spending is 2/3 of the U.S. economy. You may hear a train in the background, just ignore that. Weekly initial jobless claims were released on Thursday, and they move up 10,000 claims to 233,000 claims for the week. That's still a very low number for weekly initial jobless claims. We're through the hurricane stuff. It's not having an impact on the job market anymore, at least by these numbers. And this is also going to be the sample week used in the October jobs report, which will be released this Friday. So we're looking for a strong jobs report. So we'll keep you updated on that. Now, in housing news, the U.S. Commerce Department reported that new home sales for September 2017 surged higher by 18.9% from August 2017 to 667,000 units on an annualized basis. Now, new home sales measure the number of new construction homes that were sold in a particular month. So this is showing new home construction still doing very well as we move into the end of the year. Now, new home sales are up 17% from September of 2016. So that's some great news there. Now, existing home sales for September 2017 were reported by NAR to have only risen 0.7% from August. And that's basically because we still have this low inventory across the country, and we also have rising prices. So that's capping the existing home sales. They're still good, but they're just not moving up. But we still have a strong housing market with the low inventory. It's going to push the price appreciation up. So it's still a great time to buy a home. Inventories were running at a 4.2 month pace. That's below the 6-month pace, which is a good number of inventory of homes for sale. Then we saw pending home sales for 2017 about the same, unchanged from August. The index was at 106, stayed at 106. So pending home sales, again, are also being affected by low inventory and rising home prices. Pending home sales are a measure of the number of contracts on existing homes to close in the future. In the local news, the next first-time homebuyer seminar, we've got two this month. One is Wednesday, November 15th from 6 to 8 p.m. That's in Wilmington, Delaware at the Independence Mall. And then the next one is Saturday, September 18th at the Christiana Hilton Hotel in Newark, Delaware from 10 a.m. to noon. You can register for either one of those events by giving us a call in the office, 302-703-0727, or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.